Hello and welcome. Today I'm going to do a short introduction to the ICT 2022 Fair Value Gap, the one that ICT insists on the 2022 mentorship. I'm going to show you how to use it to analyze your trades, and then we'll do an example. This example right here. So we are starting, let's start with the daily so that we can check on the fair value gap. So a fair value gap, an example of a fair value gap is this one is a fair value gap, this one is a fair value gap, this one is a fair value gap, this one is a fair value gap. So how do you identify the right fair value gap? That's what I'm going to show you today. The correct fair value gap, as you can see here, it's this one here. This is the correct fair value gap, and this one. And then there is a small fair value gap here. So the fair value gap must be on the trend, must follow the trend. For example, here the trend is bullish, as you can see. So we look for bullish fair value gaps. Let's use this one and mark it out. So this is the fair value gap, and it should be at around the discount range. So the discount range you can see is at 0.05. So this is the fair value gap. How to set your Fibonacci settings? Let me give the settings for the Fibonacci. Here they are. These are the settings for the Fibonacci. So in a bullish market, anything below the 0.5 is considered a discount, and anything above is considered premium. So if we want to place our buy orders, we are going to place them at a discount. We don't want to buy at a premium price, as you can see. So what you wait for is you mark this fair value gap. It's around the 0.5 level of the Fibonacci, and then you wait for it to be tapped. As you can see, the market rallied up. This is a full day candle, and then it came back down, and then it respected it. You can see it at the halfway. It never closed below the discount level. That's how powerful a fair value gap is. Another fair value gap, as you can see here, the trend is now bearish. So if you sought for a bearish fair value gap, this one here, there is this fair value gap. You can mark it out. You can see it was respected and utilized to move the market lower. So if you come here, there is this fair value gap. There is this one. Another fair value gap here. So the right fair value gap must follow the trend. That's how the fair value gap is identified in the daily time frame. That's how you use the fair value gap to identify the market structure shift and the bias. You can use it to find the bias. As you can see here, today I was bearish. Why? Because the market traded to a fair value gap. It was very small. It's a very small fair value gap idea. Yeah, it's a very small one. So the market had traded into this fair value gap, it had respected it, and now we are going lower. We are aiming for which lows? These lows right here. So we are bearish in the daily. Okay, and the 4 hour, this is the way you can use a fair value gap. This is a bearish fair value gap. This is right here. You can use it to counter trend the market, you see, downwards. The 1 hour, this here, can see it's perfect fair value gap uses, perfect fair value gap utilization there. On the case of having a premium, you see, there is precision signatures in the algorithm. The market just came and touched the, now this is bearish, up here is discount, down here is premium, touched the discount level and then moved, gravitated low. And you see how perfect uh, and powerful a fair value gap that is at the 0.5 level is. Okay, let's go and use it now as an example for entry. So as you can see, we were bearish, very bearish. So I was looking for a bearish trade. So an example is this. So for me to enter the market, I must see a market structure shift downwards, like this, and they can close below this or right here. And then I enter using a fair value gap. Now, the way to enter using a fair value gap is you can see identify there is a fair value gap right here. And the move, let's use this one to mark it out. Which fair value gap is at the premium level? This one right here. That's how simple it is to get a fair value gap. So that's the fair value gap. So I entered right on the fair value gap, stop loss at the higher high, and then I targeted a 1 to 2 risk to reward, as you can see. Trade it, take profit. So this is how to use a fair value gap. You can use it to get the buyers and make for the entries, right? That was all for today. This is the first episode I was doing on how to use a fair value gap. Hope you guys understood. There is another fair value gap right here. You can use, and a fair value gap is not yet respected if the high is not broken. Disrespected, that is. So you can subscribe for the next episode. I will be doing about order blocks, how to use order blocks. Yeah, subscribe to get more learning tools like this.